Wednesday, August 21st, 2019, Maneco 64, home of alternative economics and contrarian views. Today I'm going to talk about the evolution of the dollar versus the Federal Reserve note. Before that, of course, I'm going to quickly look at where the markets are. I'm a little later today. I've got a bit more time this morning, so I took a little more time doing this research. So it's just before 9 a.m. London. Let's see where the markets are. So we've got spot gold right now down 10 at 1496.50. Yesterday we saw gold sell off as well early on in Europe and then rebound throughout the day, and it actually closed above 1500 Federal Reserve notes. The range has been 1496.50, so we're right near the lows, to 1508.44. Silver is at 16.99 Federal Reserve notes, down about 1% or 16 cents. Range has been 16.99 to 17.20. So right as I start my video here, we're on the lows. The Dow is up 97 points at 26,060. Of course, yesterday was not a great day for the stock market. Dow finished down 173 or 0.2%. S&P finished down 23 or 0.8%. NASDAQ also finished down 2/3 like the Dow, down 54 points. So markets are rebounding a little bit. Stock markets, the S&P 500 is up 0.5% or 13.4 points at 2913. These are all futures, of course. The NASDAQ 100 futures up 48 or 2/3 at 7712. Sterling is down 1/3% versus the Federal Reserve note at 121.34. Hope you don't mind I use that term, because what I'm going to talk about today makes it obligatory, in my opinion, for me to talk like this. The euro is unchanged versus the Federal Reserve note at 110.93. Federal Reserve note is up 1/3 versus the Japanese yen at 106.55. Federal Reserve note down slightly versus the Chinese yuan at 706.35. WTI crude up 1/3%, 56.30. Brent crude up almost 0.75% at 60.11. Bond markets. Yields dropped yesterday with the weaker stock market. This morning, conversely, they're a little higher yields. The 10-year yield is up 3 basis points at 1.59%. The 2-year is at 153.4, up 2 basis points. The 3-month is at 196. Curve still inverted from 3 to 10s, of course. So now I want to talk about the evolution of the dollar versus the Federal Reserve note. Yes, and there is a difference. If you look at the article here from the Mises.org website, A Constitutional Dollar, it talks about the Constitution and the Coinage Act of 1792. And this is what it says. The United States never was or could be constitutionally on a dual standard or gold standard. It circulated silver and gold coins as a media of exchange by adjusting the contents of the gold dollar to a silver standard dollar. For example, the Coinage Act of 1792 authorizes eagles, each to be the value of $10 or units, i.e. of 10 silver dollars, and to contain 247 grains or 4/8 of a grain of pure gold. Since the dollar contained 371.25 grains of silver, this brought into legal equivalence 3,712.5 grains of silver and 247.5 grains of gold. The ratio was 1 to 15. In the Coinage Act of 1834, Congress adjusted the gold eagle. Each eagle shall contain 232 grains of pure gold. This brought into legal equivalence 3,712.5 grains of silver and 232 grains of gold. The ratio was 1 to 16. The reason for the change was that gold had appreciated in market value relative to silver. So this is what I'm looking at, and I'm looking at a $5 gold coin from 1899. You can see here, and this is how I had the idea of doing this video, because I was wondering how much that is worth in Federal Reserve notes, because the Constitution says nothing about the Federal Reserve note. And the banknotes that you use, the Federal Reserve notes that you use, are not dollar bills, because they're not convertible into gold dollars or silver dollars. Let's get one of my silver dollars here. Well, that's a quarter of a silver of a dollar. So yeah, the present Federal Reserve notes we use, or people use, are not convertible. So that Federal Reserve note has nothing to do with the dollar, even though it's still called dollar. There's still dollar written on it, and it's not really a bill. So let's have a look at the evolution and why I think the ratio between the Federal Reserve notes and gold has changed, of course. So let's go through it. The evolution of the dollar versus the Federal Reserve note. As per that 1834 Act, 1 troy ounce of fine gold equals $20.67. So that's what we're working with. In 1913, of course, the Federal Reserve Act was passed by Congress. Back to 1899, when that coin was minted at the San Francisco Mint, and I know that because there's a little S there below the eagle. So $5 back then equals 0.2418 of 1 troy ounce of gold. You get that, of course, by dividing $5 into $20.67. So that's quite easy. 1909, same thing. $5 equals 0.24189 of 1 troy ounce of fine gold. And then in 1919, of course, things change, because the Federal Reserve Act had been passed by then. And now we have to contend with Federal Reserve notes. Federal Reserve notes. 1919, things change, of course, because the Federal Reserve Act had been passed by then, 6 years before. So now you have the Federal Reserve notes to contend with. But it's still the same. $5 equals 5 Federal Reserve notes, right? And then 1929, the same thing. And then 1939, things have changed. Because in 1934, the Gold Reserve Act had been passed and changed the definition of the dollar. They did not change the coins, of course, because they used a Wartime Emergency Act in 1933 to basically trample the Constitution. They confiscated gold coins from all Americans, and they took America off the gold standard. And they changed the definition, of course, of the dollar. Now, 1 troy ounce of fine gold was $35. So the $5 that I have here is still 0.2418 of 1 troy ounce. Back in 1939, of course, you couldn't hold that anymore. You could hide it. And it equaled 8.466 Federal Reserve notes. So the Federal Reserve note was devalued versus that. You can clearly see. And then you can see that throughout the 40s, 50s, and 60s, it stayed the same. And then, of course, in 1971, the link between the Federal Reserve note and gold was severed by Richard Nixon. He did not suspend the convertibility of the dollar, even though that's what he says. He suspended the convertibility of the Federal Reserve note into gold. So that's where people get confused, and that's why they still use the term dollar for the pieces of paper that we use as currency, but it should really be Federal Reserve notes. Federal Reserve notes have got nothing to do with the dollar. So this is still $5. The Federal Reserve note that says $5 is an imposter, of course. So after Nixon closed that Federal Reserve gold window, confidence in the Federal Reserve, of course, went down the tubes. And by 1979, $5 or 0.2418 of 1 troy ounce equaled 126.75 Federal Reserve notes. And I took the fixing, AM fixing, at the last day of 1979, last day of the year. What about the term troy ounce? Why is that so important to put there, troy ounce? Well, because it's different from the normal ounce. The troy ounce equals 31.1035 grams. The normal ounce that you use in everyday shopping is 28 grams. So that's why it's so important to specify the troy ounce. So by 1989, actually the Federal Reserve notes revalued. People gained confidence in them because you could get, you didn't need as many Federal Reserve notes to get 1 troy ounce of gold. You only needed 96.99 by 1989. And why do I think that happened? Well, because Paul Volcker, who took over the Fed in 1979, he, how can I say, regained confidence of the markets and investors in the Fed. He helped investors regain confidence in the Fed by raising interest rates on Federal Reserve notes. So that's one of the reasons why he righted the ship, so to speak. In the early 80s, there's a lot of talk about going back on a gold standard because the Federal Reserve notes were not, people didn't want them anymore. But Paul Volcker did a good job, I guess. And then by 1999, with Alan Greenspan, people had gained a lot of confidence, even more confidence in the Federal Reserve notes, as you only needed 70.48 Federal Reserve notes to get $5, right? But since then, and all the big crises we've had, the dot-com bubble burst, the '08 financial crisis, and the emergency, how can I say, monetary policy or unconventional monetary policy that we've had since then is still in, how can I say, effect. You can't deny that. We know what's going on with the central banks. People have lost a lot of confidence, investors especially, in the Federal Reserve notes. And who issues the Federal Reserve notes? Well, the Federal Reserve. So people are losing more and more confidence in the Federal Reserve. So as of today, and I've used 1500 ratio between 1 troy ounce of fine gold and the Federal Reserve note. I know it's dropped since I did this earlier this morning. It was trading around 1500. It's just a nice round number anyways. And we are around that level. So right now, $5, it's still 0.24189 of 1 troy ounce of fine gold and equals 362.835 Federal Reserve notes. So you can see that since 1999, people's confidence in Federal Reserve notes has been dented. 2009, you can see there it was at 267.04. And now is at 362.835. So I think that trend's going to continue. Central banks have no credibility, in my opinion, and more people are starting to realize that. So that ratio between Federal Reserve notes and gold is going to keep increasing, in my opinion. Right now, $5, of course, is 362.835 Federal Reserve notes. And I think that ratio is going to keep going higher. So that means the Federal Reserve notes, or what people call the dollar, is going to continue to sink versus constitutional money, and silver as well, of course. I hope that helps people understand a little more the difference between a dollar or $5 and Federal Reserve notes, and the fact that the currency we use now is not really a dollar. So, and we know the definition of a dollar, of what a dollar is. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and DTube. I wish you all a great day. Take care. Bye.